his results, I would like to submit to you that that would be the best starting point for all of you. If you are not profitable, if you've never been, well, let me rephrase that, because 100% strike rate winning days, 10 days in a row, that's probably a little bit lofty. If you made that much in 1 month, trading with one contract, one mini contract, you shouldn't look at that and think this isn't enough, because for most people in America, that's a mortgage payment, maybe part of a utility bill, maybe part of a car note payment, a rent and utility bill together. That would do a lot if that's all you ever amounted to. If you never got past that point and you resisted the temptation to over leverage your account, to trade more than just one good setup, and when you get that good setup for the day, you stop. Let it sit and take root that you did it right. Be comfortable in the fact that you did it right. You didn't do things outside of the program. You didn't do things that were, well, retail minded. More trades, push your edge. Got to do it, got to keep going, keep pushing. That's exactly what every gambler does at the casino tables. When the girl next to him, hey, you're doing really good. Here, want me to blow on your dice? Subliminally, she's trying to offer something else. You give me some of that money, I'll blow something else. But that whole reckless abandonment of just keep pushing, get wrapped up in the frenzy. And then when you take your results to social media, no matter what they are, you're going to have someone that's going to come out and be opposition to you. Oh, well, that's something else. You should have done better than that. I did something better than that. But they won't show you their results. Or they'll show you some stupid shit from 2021. Where the hell's they been trading since 21? They're opinionated on social media. Oh, yeah, I knew this was going to happen. But they have nothing. Humble beginnings is the right place, because you're going to learn to trust yourself. You're going to learn to trust your model. You're going to learn to do just enough and be content with enough. Let me tell you something. If I could roll back time and be 18 years old, see, Cameron's trading before I started trading. I was 20 years old. And I don't think that, I don't think I could have contained myself if I had what he has in his hands right now. Like, it's a very simple little model. It's very simple. An hourly or a 15-minute high or low that's most likely going to be drawn to for a stop read. You don't need a daily bias for that. You need to have the understanding of the daily range. It's probably made its interim high or low of the day, and there may be a retracement that's expected. Okay. Does it offer at least 15 handles from where you think it's going to be right now until it goes to that low to take the sell side, even if it's going to go higher for the day? Or if we look at the hourly chart, that higher low that is most likely being drawn to, does it offer at least 15 handles? If it does, he's going to drop down into a 30-second chart and aim for that 15 or 60-minute high or low, whatever it is in terms of the draw that he's looking for. And he's not looking for the full move because he's scared to hold it. There's nothing to be afraid of admitting that in the beginning. That's a humble beginning. He's afraid that if he holds on to it, it might turn on him. He has unrealistic fears, just like you do when you're in a trade. It's funny how you're in a winning trade, or the better trades that you should be taking, you know it's most likely going to reach to a specific level. You can see it going there. It hasn't done it yet, but you can see it happening right in front of you. It's going to shoot right there to it. But in your mind, you're thinking, but I know as soon as I get in it, it's going to drop 30 handles real quick against me. They're going to get me. They're going to get me. Think about that. I just nailed some of you right now, didn't I? And then when it runs to the thing or target you were looking for, you're like, man, why didn't I take that? Right. Why didn't you? Here's the reason why. You were going to trade with more leverage than you should have. You were not entering at a PD array. You were going to just chase price instead of just waiting for it to drop down if you're bullish into an imbalance or run a very, very short-term low. If it takes a 1 minute swing low out or a 5 minute swing low out and you're bullish and you're thinking for that 15 minute or 60 minute chart, folks, I'm teaching the model in case you're not paying attention. Once there's a 5 minute or 1 minute stop run against the direction you think the draw is, either the 15 or 60 minute liquidity, then you drop down to a 30-second chart. And the very first fair value gap, you enter on it. Your stop loss is 12 handles, and you aim for best case 15.